Hello everyone, welcome to our fourth video lecture of our chapter Money and Credit Economics. So in our today's class, we are going to discuss all the leftover chapter. So let's get started. So the first topic that we have in front of us is formal and informal sector credit in India. Moving forward, we are discussing over here is types of loans. Okay, let's see. So this diagram basically gives an idea that from which sources loans are taken. So loans can be classified into formal sector and informal sector loans. So let's see. So first is government. So over here, the color of government is only 1%. That means only 1% of the people from rural households take loan from government. And this particular is for the year 2012 India. And 2% is from other informal agencies. 8.0% is from relatives and friends, which we have discussed is the form of informal. Then 33% is from moneylender, again informal as per our discussion. And 1% is from landlords, again informal. And 5.0 is from other institutions. Then we have commercial bank in power and then cooperative societies. Okay, now this is a lot. Moving forward in loans, we have formal and informal sector of loans. Alright. So formal sources of loans are supervised by RBI. Informal lenders charge higher rates of interest, leading to reduction of borrowers' income. So do you know, fun fact over here is that if someone of us may think that bank has the sole authority in order to provide loan and they can give anyone, so it's nothing like that. Bank is always supervised by RBI, always and always. Reserve Bank of India. So Reserve Bank of India always supervise bank. And do you know one thing, that bank always sends a report to RBI as to how much deposit they have kept with them, how much deposit they have given loan of, what are the interest they are charging, how much they have helped small business to grow, how much they have helped big business to grow. So basically, bank is not, on its own. Bank is under a control of RBI. Whereas talking about our informal lenders, which are our traders and all the other examples that we have discussed in our third video and just now. So over here, they have the sole authority. They do not have to answer someone. So what they do is they play a trick onto poor people and they try charging high rates of interest on them, which basically directly leads to the reduction in borrowers' income. So basically, they are two different sides of formal and informal. Moving forward, we have formal and informal credit. Who gets what? So the formal sector still meets only about half of the total credit needs. Most of the credit needs are met by high interest informal loans. Okay. Before making you dig deep into this diagram and everything, let me make this statement very, very clear to you by just directly telling you the meaning. See, sometimes when a poor or a borrower goes to bank, for example, I am poor, I need loan for say some of my farming activities. Okay, I need loan. I am going to the formal part, to the formal association in order to get credit, in order to get my work done. So what will happen is, I do not have that much collateral, but I have some. So I'll deposit that much amount of collateral to the bank, to our formal sources, and I'll get some amount of money from them. But that amount of money is not all I need. I need more. I need few more amounts, few more money I need with me in order to get my work done. So that few more amount will be fulfilled by my informal sector, because in bank I'm not able to get that much, depending that I am a very poor farmer. I don't have that much collateral to submit to deposit, but I am honest. So this is something that doesn't work with banks, that I am honest. I cannot say like that. I have to keep my collateral. So, in such scenarios, banks are only able to give half. The rest are always given by our informal sector, which are relatives, traders, family members, things like that. Okay. So now I hope this line is clear. Now, when we'll come here, then see, in poor households, 85% of loans are from informal sector and only 15% of loans are from formal sector. I hope now you can relate with my this particular example, because I cannot have that much collateral with me. The one that I'm having, I have already deposited, but with that I'm not able to get the proper help I need. I am able to get the help I need, but that's not all I want. I want more in order to get my work done. I'm reiterating this statement. So that is the reason that why I am going to my informal sources now. So for poor households, you can see 85% of their dependency for credit is from informal, whereas household that have few assets with them, so for them 53% of their dependency is on informal and 47% is from formal. Now households that are well taken care of, there only 72% are from formal and rest 28% is still for informal. For the rich households, 90% of them are directly dependent on formal sectors, which are your bank, and only 10% that is so-so case is dependent upon your informal sector, which is your friends, family, relatives. Okay. Moving forward, we have conclusion. So there is a need for formal sector lending in rural areas and among poorer households. So this basically means that till date there is still a need where we need some formal sectors like bank to be there for the rural people as well, because reason being that they are seriously they get trapped in a debt trap when it comes to informal sectors, and this is something that all of us have discussed a lot of times, right? So there should be formal sector for the people who do not have that much collateral. This is what this particular point means. Moving on, while the formal sector loans need to expand, formal sector loans need to expand. That means formal sector people need to give loans. It is also necessary that everyone is able to avail these loans, so that everyone should be able to get these loans. Some people in rural areas are not able to get these loans because of the collateral. They do not have that much thing to submit as a collateral to pledge on that they will repay it in future, whatever they are taking. Okay, moving forward, self-help group, also known as SHG for the poor. So these self-help groups provide loans to those who cannot access or provide collateral using savings pooled by its members. So these self-help groups are the groups of people, they live in village area only, they are from rural areas only, and what they do is they have their personal savings all pooled in by all of them. All of them submit some or the other amount of money depending upon as to how much they can. Okay, and then all the members for say A needs help. So what A will do is A will go to these SHGs in order to ask for help, and they will help them by providing all the money that they have, so that it can be used directly by him in order to get the work done, or it can be used by him to submit as a collateral in order to get some more amount from the formal or informal sources. So like this, they help poor people, which is a very good thing. Now, advantages of SHGs. Lower rate of interest. So it's not like they give you loan and they don't ask for interest. They do ask for interest, but it's very, very less. For example, it will be 1% or 2% or something like that. Okay, very less as compared to formal and informal sources. Second thing is may become eligible for loans from bank. So with the like all the amount they help you with, so you may become eligible for loans from bank. Okay, helps create self-employment opportunities for the members. Decisions about loan are taken by the members, so they do not need any banks or any RBI to make decision for them. Members in the team only are the ones who take decision, overcome the problem of collateral. So they help people, poor people, borrowers who do not have enough collateral to overcome the problem of collateral. So now, the next thing that we have with us is Grameen Bank of Bangladesh. Started in the year 1970, Grameen Bank had over 9 million members across 81,600 villages of Bangladesh in 2018. So this is a great, great achievement. Moving forward, over here we are having questions which are, I said in the start, these will be the questions that can definitely come to your exam. Okay, so the first question that we have over here is, in situations with high risk, credit might create further problems for the borrower. Explain. Over here, I'll just say one word and tell me, I can guarantee all of you will be able to remember the answer. I told you that sometimes when a borrower takes loan from the lender and that borrower is a farmer, okay, then for example, the farmer is taking loan in order to get some or the other thing for his farming purpose. He is taking loan, he gets things, but his farming is not only dependent on those supplements that he is getting. It also depends on rain, which is out of every one of us control. So what if rain doesn't come? His entire crops that he has grown will all go into waste. And the money that he has taken from the lender, he will be making like all of that money will go into loss, and again he will be in a debt trap, because in order to overcome that loss, in order to repay that lender, he will again have to take money from somebody else. Then again, in order to repay, again he need to depend on the rain. And what if again this situation happens, right? So this type of situations create credit in a very worst format. Like this is something that might happen with the people because they are very high risk of chances that are involved. So that is why this is a sort of situation example that you can give, which literally justifies that high risk credit might create further problems for the borrower. So moving forward to our next question, how does money solve the problem of double coincidence of wants? Explain with an example of your own. So, double coincidence of want is something that we have discussed in our first chapter. So, I'll just brief you about it one more time. For example, A wants rice and B wants clothes. Okay. Over here, we also have a C candidate who wants some shoes. Okay. So over here, B is having shoes, but over here, when C wants shoes, C is having, you can say, rice. So if C says to B that take shoes, that I want shoes, take some rice in return from me. But we will say that sorry, I don't want to take rice. I want clothes. You do not have clothes. So this whole problem is solved with money. So now when C wants some rice, or for example C wants some clothes or whatever, right? So what they can do is they can use money. Money has that value. Money is the unit of the value that everyone wants. So now when C wants something, he can directly pay money to B and get it. When B wants something, B can directly give money and B can also have it. So money is that one thing which is useful for everyone. So this is how money has literally solved the problem of double coincidence of wants. Moving forward, how do banks mediate between those who have surplus money over here means extra money, and those who need money? So it's very simple. This is something that again we have discussed a lot of times that bank, for example, okay, let's just take example like this. A is the one who is having surplus money. So what A will do is A will go and make a deposit into the bank. Okay, makes deposit into the bank. Now what bank will do is bank will keep 15% of the deposit and will use the rest of the money in order to give the loan who need money. Okay, so this is how bank functions in very layman's language. Bank takes money from those who have huge amount of money and give loans. And one more point to note over here is that person who deposit money into the bank are the ones who gets interest, and the person who takes money from the bank are the ones on whom interest is always charged. Okay, so there is the difference between borrower and lender when it comes to interest. So this is how bank functions between those who have surplus money and those who need money. So I hope this is clear. So, look at a 10 rupees note. What is written on top? Can you explain this statement? So, over here, they are asking us to look at a 10 rupees note and then to tell us that what is written on us. So, I hope most of you have seen the 10 rupees note. So, it's written on a 10 rupees note that I will promise you to bear, or it's written something like that, that I promise you to give the 10 rupees that I'm taking from you. So this is basically means that the 10 rupees is always accepted as the medium of exchange, and this 10 rupees note is authorized by RBI, which has been stated by the central government, and nobody but RBI has this authority to issue the currency of India, which is rupees. So I would suggest all of you to go and look, have that 10 rupee in your hand. It's written something like that, that I promise to bear the sum of rupees 10 to you. So that means when a borrower takes money from the lender, this is something that a borrower states. And if you remember, you must have heard this from your grandparents or papa, mother, father, that 10 rupees were a lot in our time, right? So that's how this whole concept is. But make sure if this particular question comes to your exam that you 100% explain the whole concept of RBI and the issuing of money, which is only and only legalized by RBI and no other body. So yeah, this is something very important. Now, why do we need to expand formal sources of credit in India? Very important question, I would say. So the reason to expand the formal sources of credit in India, I would directly say it's because of the informal sources. Informal sources, when people are these days, people are more dependent upon informal sources, because of which they take loans from informal sources rather than coming on to formal sources and taking loans. So we should try to expand the formal sources, because when they take loans from the informal sources, first and the foremost thing is that rate of interest, which is interest rate, is very high, and which always like 90% it leads them to be in the debt trap, which is not good. Like, it's really not good. This is one of the very important reason why we should introduce formal sources, and we should make sure that all the farmers or everyone, all the borrowers in the rural area who needs loan must go to formal sources instead of relying to informal sources. Because okay, it might be collateral issue, but then again, collateral issue is something that we can work on. Formal sources can turn down their collateral needs, and they can say, okay, this much is fine. So yeah, this is something that we need to work on. But yes, the why, this is why. If someone is asking you why, then this is why. And trust me, if this question comes to your exam, make sure that you always give that complete agriculture example and the rain example as to why we are saying that debt trap is there. So this is very important. Moving forward, what is the basic idea behind SHGs for poor? Explain in your own words. So the basic idea behind SHGs is that they help us in a collateral, they help poor in collateral. Also, they have some job opportunities for the people. Apart from that, they are basically a big support for the people in rural area who need loans. They basically, if someone needs loans, so what they do is they basically give the money. So yeah, you can always write this, all the points that we discussed under the advantages of SHGs. You can always make sure to write these points into your own words by giving example, making it an answer of supposedly 4 to 5 marks. Moving forward, what are the reasons why the banks might not be willing to lend to a certain borrower? Again, the answer for this will be absolutely same, because borrowers sometimes are not able to repay back the money that they are taking. They basically, whenever a poor farmer goes to the bank in order to ask for some loan, they generally say that what collateral you can offer to bank as a guarantee that you will come and you'll repay whatever amount of money you are taking from us. So sometimes, not sometimes, I would say around 80% it happens that they don't have that much amount of money with them. So they do not, so hence what happens is bank don't even give that, don't even give them this. They directly say no, that's sorry, even if you want this, because you don't have collateral, we cannot offer you this is against our policy. So this is the main reason why banks are not willing to lend money to borrowers, because they cannot repay. The reason that they cannot repay is again because of something that nobody can look up. Rain is not something that are in control for us, but we cannot write this. But this is something that generally happens. So you can always explain, you can always add on to this whenever this answer comes in the form of example, for sure. Moving forward, in what ways does RBI of India, which is Reserve Bank of India, supervises the functioning of banks? Why is it necessary? So as I told you in, I think, last to last question, that RBI always makes sure as to how much deposits are bank keeping every time. Banks always send this reports to RBI, like every month bank sends a reports to RBI as to how many deposits they are keeping, how many small businesses they have lent money to, how many small businesses they have helped in growing. So all of this has been taken care by RBI, and this is necessary basically to make sure that there is a you can say consistency. Nobody is taking, no, bank is not taking money for free and lending to everyone. So this is something that needs to be taken care of in order to maintain a consistency in economy. So this is the main line. Why is it necessary? In order to maintain a consistency in economy. Consistency in economy. So this is the main reason that why RBI is needed and why supervision of RBI is very important. Now, It says analyze the role of credit for development. So role of credit is initially very important when we see borrowers and people who need money. If they want to develop, if they want to grow their business, so they generally need loan, they generally need credit. But the ways of they taking credit is something that decides their future. Generally when they take credit from informal sources, then when they are taking credit for agricultural needs, then again we have a factor of rain and many other climate factors that are not in control, which may lead to debt trap. But on the other hand, also one more point, that interest rate is very high, like it's extremely high when it comes to informal sources, whereas formal sources does not offer that much interest. And yes, they do ask for collateral that is used by them in order to take pledge as if they're gonna repay every time they take loan. So yes, credit is very important. It genuinely plays an important role for in order to make a borrower grow their business. In order to make a farmer grow his business, he needs some products that he can only get if he has money with him. So yes, you can obviously explain these type of examples in order to make your answer of 3 to 4 marker. Moving forward, Manav needs a loan to set up a small business. On what basis will Manav decide whether to borrow from the bank or the moneylender? So the first thing that you can take is that Manav will see the collateral thing. Who is asking for collateral, who is not asking for collateral. The one who is asking for collateral, is it more than to one who is asking it but it's less? So collateral is the first thing. Second thing that you can say over here is a rate of interest. Rate of interest, who is offering more rate of interest and who is offering a little less rate of interest. So depending upon that, basically Manav will decide as to whom he should go. So if the collateral, for example, he decides to go to the bank, so he will see that yes, the collateral that they are asking me, okay, it's less and I can manage it all, and also the rate of interest is also very less as to what the money lender is charging me. So all of these are the factors that he will see in order to get credit from formal or informal sources. Moving forward, so in India, about 80% of farmers are small farmers. Why might bank be unwilling to lend to them? So answer to this one is pretty same, that bank thinks that borrowers or the people who are asking for loan, they might not be able to repay. So they might not be able to repay is their thinking, which is the main concern, that they do not think that they should be providing loan to them. Second is, give an example of how many terms of credit may be unfavorable for them. So, how terms of credit may be unfavorable for them. So, basically, when they are asking you to give an example as to how terms of credit are unfavorable for them, is basically the part where they were asked for collateral, then they think the interest rate is pretty high to them in order to fulfill. So all of this you can include. Then next, what are their source of credit? So when it comes to their other sources of credit, what they can do is they can try not going to informal sources and going to formal sources, but then formal sources are not that much ready in order to pay them loan. So what they do is their other sources are directly by going to informal sources. And last, our question is, suggest how small farmers can get cheap credit. So small farmers can basically get cheap credit with the help of SHGs, self-help groups. Apart from that, they can also get help from rural agriculture banks and also cooperatives. Like these are the three main things, these are the three main sources from where small farmers can get themselves credit at some cheap rate. Okay, so this is basically a 4 marker question. 1 marks for each. Okay. Moving forward, there is a quick revision. Now we are going to revise everything that we have covered till now in the chapter. Moving forward, the first point is money acts as an intermediate in the exchange process. It is called medium of exchange. So this is one and the very important point, that when money came, it became a medium of exchange. Now, the modern forms of money include currency, bank deposits, and checks. So currency means cash, which is in the physical form. Bank deposit and checks are your virtual form of money. Okay. Now, next is in India, the Reserve Bank of India issues currency notes on behalf of central government. I hope this point is clear to you. Next is banks uses their customers deposit 15% to provide credit or loan to the borrowers. Next is every loan agreement comprises an interest rate. So interest rate is something that the borrower is charged when they are asking for the loan. Collateral, which is an asset, documentation requirement, and mode of repayment. Next is credit may be availed from formal and informal sources. So these are the only two sources from where people or borrowers can get the credit. Either they can get it from formal, which is banks, or from informal, which is friends, relatives, things like that. Now, formal sector loan sources are supervised by RBI, also known as Reserve Bank of India. Next, informal sector loans include a high rate of interest. Very, very true statement. It's very true statement. Must say that as to what we have discussed, we also have came to the conclusion that when a borrower is getting the loan from some informal, which can be their friends, family members, the rate of interest that they charge is very high, and that's how the whole story actually started of leading that poor farmer into a debt trap. Okay, now the poor of India are still dependent on informal sector of loans, which is very bad, which keeps them in a cycle of debt and poverty, because the only reason over here is the interest rate, which is the main thing that's affecting them. Last but not the least, cooperative banks and self-help groups are finding new ways to provide loans to poorer households, especially in rural areas. So this is basically the new future, you can say, for those who don't want to pay that much high amount of interest. As discussed in the last question, if you remember, that what are the other sources of in order to get cheap credit. So these are SHGs, then rural banks are there are agriculture cooperatives that can provide them cheap credit. So yes, this was all about money and credit that we discussed, how money is there, what are the forms of money. Till date we have discussed what were the forms of money. So I hope everything that we have done in our today's class and what we are doing from past few classes and our video recorded lectures is clear to you. And last thing that I would like to request all of you is to make sure that you go through all the NCERT questions that we have discussed in our today's class and in our other classes while we were discussing our chapter of money and credit, because these are very, very important questions that can definitely come to your exams. So thank you so much for joining me. I hope you understood everything. Thank you.